Are you sabotaging your trading success without even realizing it? There is a very big chance you are, because I looked at a bunch of traders' personal analytics, both beginner and expert, and after reviewing them, I kept seeing the same expensive mistakes over and over again that were wrecking their entries. So today, I'm going to show you the strategy that I use to get the best entries that will improve your profitability, so you can actually make more money and be less frustrated when trading. But why are good entries so important? Picture this. You're at a busy market eyeing a popular fruit stand that sells mangoes. Let's say you love mangoes. And you notice the vendor restocking with fresh, ripe mangoes, and a small crowd gathers around her stall. You spot the opportunity and decide to buy a few mangoes before the crowd gets any larger, and you pick the best fruits. By acting promptly, you secure the juiciest mangoes at a fair price. Later on, as more shoppers swarm the stand, the remaining mangoes are either overripe, overpriced, or both. This scenario shows the importance of your entries when day trading. Entering a stock at the right moment will not only enhance your potential for profit, but it can give you the best risk to reward and make it less likely that your stop loss gets hit. On the other hand, mistiming your entry may result in buying at a peak, which messes up your profitability, leading to more losses. Therefore, just as in the busy market, being attentive and making timely decisions in day trading is crucial for the best outcomes. At the end of this video, you will possess an entry strategy that will not only increase your probability if you're already profitable, but it can help you newer traders get on the path to profitability even faster. Now let's look at a live example of a trade I took recently. There are a few ways I use to get the perfect entry, but I'm going to show you two different ways. So with this strategy, I'm looking for a good price based on pre-market support and resistance. One thing to keep in mind is you never want to place a buy or sell order in what I call no man's land. This is the worst mistake you can make. Your entry should always fall either at whole dollars, half dollars, support, or resistance, key breakouts, or key breakdowns. So in this case, my entry was based on this resistance line that I drew from pre-market. I noticed that just before market open, these candles were struggling to break past this level. To be able to catch a trade like this, you have to be quick and observant. Plus, your stock selection is very important for these entries to be good. There was a lot of volume just before the market opened, so I knew this would be a quick scalp right out of the gates. When all these conditions came into play, I placed my entry order long, right above the resistance price. Not below, not on, and not way above. Just a few cents above. This was on the 5-minute chart. So if you're quick and notice all the signals, you can get an entry and exit like this. Let's see what ends up happening. It's a winning scalp trade. It reversed quickly after. That's why the right entry is important. Any later and you would have been caught in this dump and lost money. Let's look at another example. Here, this stock didn't really do anything pre-market. It consolidated, but there was good volume. I've noticed these entries work best on stocks with at least 3 million in volume, so that was a great sign. As the market opened, the volume even increased, which was an even better sign. Because the stock gapped up on the day, it was the leading gapper that morning. Look what happened at market open. It pulled back, which was the final sign. Then I placed my order right above the open, just a few cents above, like 2 or 3 cents. Then look at the move it gave, which was awesome. Remember, don't place your order below or on the open price. You want it just a bit above. This is for a little added confirmation. You also can't hesitate when jumping into trades like this because, as you can see, it moves pretty quickly. This entry strategy works well with mid and large cap stocks. But look what happened later on. We got this beautiful wedge pattern. The volume was already good on the stock at this point. It was about 12 million shares. And the volume in this area was increasing. So I placed another long order right a few cents above the break of this wedge. Then look what happens. It gave an amazing move to the upside. In both cases, if my entries weren't in the right place, I would have either had a losing trade or I wouldn't have capitalized on the entire move. So that proves this strategy can increase your profitability. I want you to understand this. So here's a great explanation from one of the best traders out there.
Added there at $15, now looking for $15.50. So there's $15.24 on the ask, $15.29, $15.78, nice. Taking a little profit, was looking for 1550, pretty much got that. Holding 600 shares now. High of that candle, 1575. New order, 1575. We're up 83%. So that entry that I just took at $15 was a micro pullback right there. That's a micro pullback. You can see it on the chart. So right now, there isn't a setup. Right now, it needs to pull back again in order for us to see another setup form. So like I'll take that trade right there for the break of 16 because for me, I can justify the risk on it. So now watching over 15.95, new order at $16 a share, and then looking for a squeeze up to 16.50. Watching this dip here, added on the dip at 15.50. So trying to buy the dip and now looking for the curl back up to 16. So this now we're looking for the first 1 minute candle to make a new high and the break through 16. So when I see 15.85 print, I'm going to add for the break of 16. So added right there, there's $16. Nice. And I'm taking a little profit as it breaks that level. So now this is again added at 16.20. This is a micro pullback. There's 16.38 and I take a little profit as it breaks through that level. Dip for me at 15.94. I'm going to try to do some dips on this. I want to see if it curls back up in a sort of fierce way, if we get a really nice bounce. So I do a starter when I'm doing this kind of dip, and then I look to add to it, and I can either add a little lower or a little higher. So in this case, I'm taking the profit because that was a decent little trade, puts me up over 10,000. Didn't give me a chance to add lower, and it popped up about 20 cents, which is enough to take profit.
Check the link in the pinned comment for a 30-day free trial to TradingView, the absolute best charting platform in the game. But if you aren't profitable yet, watch this video next to speed up the process.